Hello. Today this session is on journal entries. Journalizing. Journalizing is analyzing and recording business transactions into a journal. Journal is a kind of book. It is the first book on which we start recording the transactions. First, these transactions should be in a chronological order. Chronological order means it should be as they are happening. That means date-wise they are happening and we have to record it date-wise. In the journal, we record all the transactions date-wise. Generally, this accounting period is for 1 year. That means we record all the transactions one by one according to the date, and after 1 year, say on 31st March, we balance all the accounts and these accounts, and this will show us that whether there is a loss or profit from that business, and what are our needs, how we can improve, how to change our strategies. All these things we come to know. We can analyze all these things. And what are the changes we require? These things we can do after deciding that whether there is a profit or loss from a business. Then sequential steps to be performed. There must be few steps. They must be in a sequence. Like first we prepare journal book, then ledger. Ledgers is also a book of accounts where we record the transactions. From journal we post the entries to the ledger. And then we prepare trial balance. Next slide, accounting cycle. It is a process. Accounting is a process. Like this process is, first we analyze a transaction, that what kind of transaction it is and how it is affecting to the business. Then we record. We have to record it that in a journal. Then we classify it, that whether it is a expense, whether it is a income or something like that. That we classify that what kind of transaction it is. Then we summarize it. There must be a proper way to write it, to record it, that we summarize it. Then after 1 year we prepare reports and interpret what is the business and how we can improve, what are the strategies we should what are the strategies and what is the how we can improve on all this. Then different steps. First is to prepare the journal entries. First we prepare journal entries. First we make the entries in the journal book. Then from journal we post the entries to the ledger. Then from ledger we post the entries to the trial balance. All the ledgers have the balances, and after 1 year these balances are posted to the trial balance, and then we prepare a trial balance, and from trial balance we prepare a balance sheet. Then journal is a chronological order of a business transactions, all these transactions must be in an order, date wise order. Like let's say we go to a shop and there we buy a pen. For that shopkeeper, how he will record these transactions in a book, like one person came for pen, another person came for notebooks, another person came for some kind of book, some engineering book, and all these things he should record in a journal, like cash to sales, all these stationery items, these books, this is his goods, this he will sell, this is his business to sell these things. So the items one who sells is his goods to be sold in the market. This is his business. Next is process of generalizing. How we generalize a transaction. First we decide generalizing is, in generalizing the two accounts are going to be affected. First is debit. One account should be debited, another account should be credited, and it has a dual aspect. Each and every entry has two aspects. One is debit, another is credit. To do a journal entry, you need to know, first is what accounts are moving impacted. What are the different accounts which are going to be affected? Like which accounts we have to debit and which accounts we have to credit. And how to classify those accounts. These accounts, we prepared three types of accounts. First is personal account, real account, and nominal account. We categorize them in a we classify these accounts according to these three, like personal account, whether it is a personal account, it is a real account or a nominal account. Personal account is when these accounts are on a person's name, like it is a, whether it is a drawing account, it is a capital account or something else. Then whether it is a real account means the accounts of assets. Like cash account, bills receivable, bills payable, wages, these are all real accounts. Then nominal accounts, accounts that reports revenues, expenses, gains, losses, these are all nominal accounts. Where the accounts are going up or down, which account we have to debit and which account we have to credit. These all we have to decide, and then we prepare the journal entry. Then there are some set rules for these three types of accounts. First is personal account. For personal account, we used to debit the receiver, credit the giver. We use this rule. Debit the receiver, credit the giver. Whosoever is receiving the money, like in a business is receiving the money. And that example of pen that earlier I have given you, the pen is coming inside the business. The cash is coming to the business and pen is going out. When a customer came to the shop, he want a pen, he is giving the cash is coming to the business and pen is going out. So debit the receiver and credit the giver. Credit whatever is going out. Real account. Debit what comes in, credit what goes out. For real account, what is the what we are debiting? What is coming in? Debit what comes in. Debit whatever is coming inside the business, that we will debit, and credit what goes out, whatever is going out. Then nominal account. For nominal accounts, what is the rule? Debit all expenses and losses, credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. So according to that example, which rule is debit what comes in? What is coming in? Cash is coming in, and credit what goes out? What is going out? Pen is going out, or sales. Cash account debited to sales. This is how we generalize a transaction. Let's say there is an example. On 1st December, owner invested 1,20,000 in a business. So business is receiving the cash account debited, and to owner's equity credit 1,20,000. In all the journal entries, while recording the transactions, what we do, we think ourselves as an accountant of the business. Then we will post all the entries in a proper order. We think from the point of view of a business. Another example, on 2nd December, purchased equipment for cash rupees 36,000. For cash, he has purchased, business has purchased equipments. So what is coming in? Equipments. So equipments account debit 36,000 to cash. Cash is going out, equipments is coming inside. So equipments account debited to cash. On December 6, Casey receives a bill for 300 rupees for advertising. Casey will pay this bill at a later date. He don't want to pay this bill, but he has to pay. So what he will do, how he will record this transaction? Expenses have incurred, like advertising expenses he has incurred, so but not paying the bill. So advertising expense 300 to accounts payable. He has yet to pay the account, so it is his liability. So to accounts payable. Casey pays the advertising bill of 1350 in cash. Cash account, accounts payable debited. Now he is paying this bill, so accounts payable debited to cash. Debit all, what rule we will apply here? Debit all expenses and losses, credit all incomes and gains. What is the difference between a compound entry and a simple entry? There are two types of entries, that is compound entry and a simple entry. Simple entry has only one account debit and one account credit. Till now we have done simple entries only. Now compound entry has one or more account debited and one or more account credit. We can debit one or more than one account debit and one or more than one account credit. Let's see the example. Let's say on 15th February, Casey earns fees of rupees 12,000. Total how much fees? He is earning 12,000. Casey receives 4,000 in cash and 8,000 is billed to customers on account. That means 4,000 he is receiving in cash, so cash account debit 4,000, 8,000 yet to receive. So accounts receivable 8,000. 2 fees earned. Whatever the total fees he has to earn, 12,000. 2 fees earns. This debit side should be equal to credit side. One more example. Casey pays expenses of 500 for rent, 200 for insurance and 175 for utilities. So expenses and losses we will debit. Rent account debited, insurance account debited 200, utilities account debited 175. These all should be debited to cash. He is paying them in cash, so 875 in total should be credited. That's all for journal entries. Thank you.